It's no secret that there has been an increase in unemployment since last year, with the labor market getting weaker, but there's even more fear within the federal government with the recent firings and layoffs of the federal employees. And it doesn't seem like any agencies or departments are safe from the mass layoffs in 2025, whether you're in NASA, DOE, DOD, FAA, IRS, EPA, and the VA, or even the weather agencies. But what's making people more nervous is articles like Business Insider recently reporting that people are applying for thousands of jobs and never got a single offer. And CNBC also reported recently that there is a significant rise in fake job listings, or also known as ghost jobs. And they're reporting that 4 out of 10 companies are listing fake jobs on their websites. And CNBC is saying that it's not a scam because they're just advertising jobs with the money they don't have to pay for the positions at this time. If you don't call that a scam, then I don't know what else to call it, but I'll keep the opinions to myself. Articles like these will certainly put more fear in people who are looking to switch from the public sector to the private sector. And you may be someone who's heavily relying on your job to pay your bills and pay off your debt. So if you're feeling anxious or nervous about your job security, I want you to be financially ready with these 10 steps I'm going to go over, so that if the time comes, you know exactly what to do. And this video may be specifically targeting federal employees and contractors who may feel uncertain about their job security, but these 10 steps can also apply to those in the private sector, and with the exception of maybe one step. But anyway, the first on the list is to adjust your TSP contributions down to 5%. Why? Because that's the exact amount needed to get your full employer match while keeping more cash in your pocket. If you're still employed, every paycheck counts. So keep the match, but don't overcommit while you're prepping for the worst. Keep in mind that your goal here is to maximize what you get from your employer without stretching yourself too thin financially. And if you keep contributing more than necessary, you're locking up cash you might need soon. But if you drop below 5%, you're going to leave free money on the table. Plus, if things turn around and you stay employed, you can always bump your contributions back up later. And this flexibility will help you protect your cash flow now and secure your future. Second, take a hard look at your budget. You need to separate the essentials from the nice to haves. And when I say essentials, I mean groceries, housing, utilities, transportation, communication, and insurance. And these are absolutely non-negotiables. Everything else, that's discretionary spending, meaning it's optional. Ordering a takeout food is considered discretionary, but getting your groceries is considered non-discretionary. That makes sense so far, right? You see, the key here is to figure out exactly how much you need to survive each month, so you know how long your emergency fund or severance package will last. And think of it like gas in your car. If you don't measure how far it'll take you, you might be in for a long walk. And don't be that person who stands on the side of the road holding a gas can, wishing they had planned ahead. Now, a great way to do this is to track your spending over the past 3 months. Look at your bank statements and credit card transactions, and you'll see where your money is going. Identify what's necessary and what can be cut, because the more disciplined you are now, the longer your money will last if you do get laid off. Third, if you've got any debt, whether it's credit cards, car loans, or student loans, pick up the phone now and call your lenders and ask them straight up if they offer temporary forbearance or deferred payments, even just for 3 months. Why? Because freeing up that cash right now lets you build a solid emergency fund while you're still bringing in money. And look, lenders would much rather work with you before you miss a payment, not after. And trust me, they don't want to chase you down any more than you want to be chased. And you also don't want your credit scores to crash like the stock market in 2008. You want to be proactive with the lenders and banks and give them a plan to resume your payment. For example, I went through the 2013 budget sequestration under the Obama administration. I was on active duty in the Air Force at the time, and they literally told everyone to get ready to separate or retire early at a moment's notice. And I had $110,000 in debt at the time. So I called every lender for my personal loans and every bank for my credit cards to reduce the minimum payment amounts so that I could save up for my emergency fund. And I even called TSP to temporarily pause my TSP loan repayments for about 3 months. And it actually worked out pretty good because most of them just made the minimum payment amount to zero for the next 3 months. And then I spent those 3 months just piling up cash in case they told me that I'm going to be separated from the military. And I really hated that feeling of uncertainty. So when I say I understand what you're going through, I really understand what you're going through. Okay. Now, here's a little insider tip. And most lenders have hardship programs, but they won't offer them unless you ask. So go ask, don't be shy, and pick up that phone and negotiate a little breathing room. But if you're unsure if you're doing it correctly, you can visit firesignature.com/consultation to schedule a 60-minute session with me so I can guide you through the process. So now we go to step 4. After you've trimmed those expenses and hit pause on debt repayments, it's time to supercharge that emergency fund. But just how much is enough? Well, that depends on two things: your essential monthly cost and how long you think you might be out of work. Generally speaking, a 3 to 6 month buffer is a solid goal. However, that 3 to 6 months rule no longer applies when you're facing unemployment. And I recommend at least 6 months of essential expenses when you're facing a layoff scenario. And I understand not every one of you can achieve the 6 months. So just do as much as you can. To figure that out, just multiply your monthly expenses by the number of months you want to cover. So, for example, if your monthly expenses are $3,000 and you want a 6 month buffer, you're aiming for $18,000. But since layoffs are looming, you might want to get aggressive with those savings. And if you got the $25,000 buyout and you need to spend $3,000 to not become homeless or go hungry, then that $25,000 could last you for at least 8 months. And that's not counting your emergency fund. In any event, you have to first figure out the non-discretionary expenses every month, from housing, groceries, utilities, transportation, communication, and insurance. And don't forget about the unemployment benefits that you could get from the state or at the federal level. And think of it like getting ready for a hurricane. Instead of stocking up your canned goods, you're stocking up your cash. The more you save now, the better you'll handle anything later. Now, someone in the comment section might argue that cash is useless in the storm, but you also don't want to use your taxable investments because there will be tax implications on the capital gains. And you also don't want to touch your TSP unless it's your very last resort. Moving on to 5th, if there's one costly mistake that I want you to avoid, it is not using your health insurance while you still have it. By all means, schedule that medical appointment and have your dental cleanings and eye exams now. Refill those prescriptions that are close to running out. Do it while you still can, because once you're laid off, your insurance coverage could end, and COBRA, which lets you keep it, is going to cost you a lot more. So get those checkups in now, because the only thing worse than being unemployed is being unemployed with a giant medical bill. And if you have an HSA or health savings account, you don't have to use up all of the funds because you get to keep that after you separate from the federal workforce. FSA, or flexible spending account, on the other hand, it has a rule that is use it or lose it. So if you have any money remaining in your FSA, then that leftover balance is going to go back to your employer. And because it's tied to your employer, you're not going to be able to roll your FSA over to a new FSA, whoever your new employer is going to be. And again, you can keep your HSA, but not your FSA. Next, I know I already kind of touched on this in step 4, but I want to touch on this again. You need to find out exactly what your employer is offering in terms of severance pay or unemployment benefits. How much are they giving you? Does it cover your expenses? Don't hesitate to request detailed documentation, including benefit summaries. And once you have the amount of your severance package, calculate how many months of your essential expenses it will cover. So for example, again, if you're taking an early $25,000 buyout package and remain employed until September, you have some time to put together a resume and find a new job while you're paying your expenses. And knowing these details in advance is not just helpful, it is essential for creating a realistic financial plan during a potentially turbulent time. Now, on to the 7th, and this one's crucial, and that is to secure your SF-50 form. And this document is your official proof of federal employment. And trust me, you don't want to be scrambling for it with HR after you've left. Think of this like your DD-214 with the military service. And get it now, because this form is indispensable for applying to future government positions, accessing your hard-earned retirement benefits, and accurately verifying your work history. And here's another tip. Make sure you get the most recent SF-50 reflecting your highest grade and step, as this will be critical for salary negotiations and future jobs if you want to remain in the public sector. Also, be aware that access to these forms can become significantly more difficult once you are no longer an active employee. Consider it your golden ticket to your continued career in federal service and an important tool for receiving all the benefits you've earned. And I know some of you in the comment section will say that you'll never work in the public sector again, but you never know what the future holds. So don't just store it in a computer, but print it out and safeguard it. And speaking of tickets, this brings me to the 8th step. Before you get locked out of your work email and employee portal, you've got to grab everything important. And I'm talking about pay stubs, tax forms like your W-2s, insurance details, and anything you might need for unemployment or when you start applying for new jobs. And it's a good time to make sure you can log into the GRB platform or MyPay from your personal computer so you can access those documents at home when you lose access to your work computer. And once you lose access to your work computer, trying to get these documents back could become a total headache. And you don't want to be stuck trying to explain to someone why you cannot prove your income or your employment history because you didn't grab those files while you could. So before you leave, make sure you've got your pay stubs, W-2, and insurance details safely downloaded and stored. It'll save you a lot of stress later. Now, for the 9th step, reach out to your supervisor and ask if they'd be willing to vouch for you in future job applications, or even better, get their personal contact information like phone number, email, or even a recommendation letter. You don't want to wait till they move on or retire. And you know what they say, a good reference could make a difference for your next job opportunity. So make this a priority. Make sure you ask them to highlight your key accomplishments and skills that align with the types of roles you'll be seeking. And also ask them about their preferred method of contact and any specific details they like you to provide when listing them as a reference. Remember, a well-prepared reference can speak volumes about your work ethics and capabilities, which potentially gives you a significant edge in a competitive job market. And while you're at it, ask for a LinkedIn recommendation, as this is a valuable online endorsement that future employers often review. Finally, and this is non-negotiable, update your resume immediately and start job hunting. And unless your dream is to become a professional couch potato, in which case, carry on. So first, assess your skills and identify how they translate across various sectors. You have to explore consulting opportunities, private sector roles, or contract work. Then rewrite your resume and cover letters to emphasize the skills that matter for the job you want and back them up with solid proof of what you've achieved. You should be networking now before you reach the point of desperation, right? You can attend industry events, connect with recruiters on LinkedIn, and reach out to your professional network. Just be specific about the types of roles you're interested in and clearly articulate your value proposition. And trust me, it's way smoother to try to find a new job while you still have one. You'll have more bargaining power and feel a lot less stress. So stay proactive, not reactive, because ultimately building your network and exploring opportunities today will give you a significant advantage in the future. And look, I know layoffs are scary, but the worst thing you can do is panic and do nothing. Taking these 10 steps now will put you in much stronger position if the layoff happens to you. And even if you don't get laid off, guess what? You've just improved your financial stability anyway. And so take action now, review your budget, secure your benefits, build that emergency fund, and get your job search in motion. You've worked hard for your career. Don't let a layoff derail your future. You've got this because I believe in you.